Well, there is some important news coming in from CNBC-TV18 sources that IRDAI is planning to be ready with its regulations before the passage of the Insurance Amendment Bill. Yash joins in with some quick highlights of that. Yash.
Well, of course, the Insurance Amendment Bill would be the single largest, regulatory change awaited by the India's insurance industry. What we've been given to understand from our sources in the insurance regulatory body is that the preparation when it comes to framing regulations around the amendments which are expected as a part of the Insurance Amendment Bill have already begun. If you remember, a couple of weeks ago, we had reported on CNBC TV18 that the regulators formed a new committee under the chairmanship of former SBI chairperson Dinesh Khara. This committee has representation from life insurance industry, general insurance industry, the legal side of representation, as well as the banking sector representation. This committee formed by the insurance regulator is not expected to suggest any changes to what has been proposed by Department of Financial Services. All it is expected to do is to frame regulations around each and every amendment which has been proposed by the Department of Financial Services. What we've also picked up from our sources is that the regulator internally expects the Insurance Amendment Bill to be taken up by the Parliament by the next two Parliament sessions. And once that has been taken up and approved in whatever form it happens, then the regulator does not want to be behind in saying that now we will frame the regulation, and hence the process to frame regulations around the insurance amendment provisions has already begun. What are the 5 most important amendments? 100% FDI in insurance sector, composite insurance license. Third one, open architecture for insurance agents. IRDA getting the authority to decide the investment regulations for insurance companies. Also, merger of insurance companies into non-insurance companies. So around all these amendments which have been proposed, the finer regulations, how they will look like, what will be the do's, what will be the don'ts, what will be the boundaries of these regulations, the preparation for that has already begun at the regulator's doorstep.
All right, we take that point, Yash. Thank you for that. Let's get you an update into the F&O end of things right now ahead of expiry. The markets have